So the big question is it possible to make 10% a month?
Well, we're soon going to find out. Welcome to the Traders Clinic, your regular shot in the arm of trader insights, philosophy and knowledge, brought to you by two professional money managers, Crooks and Charlie Burton.
Each show we cover your burning questions and cover all things from the world of trading. So, different show this week, a little bit different. We're going to be covering one big question because it's something that I know you get asked and I get asked a lot, which is this whole thing around, is it possible, is it really possible to consistently make 10% or even 20% a month? Sometimes the figures are even higher than that we get asked. So that's where we're going to start. I think it's a really important subject to discuss because you've had some interesting insights on this as well.
Well, I mean, this was a question that came through literally this week. And I think the other thing that this person said, to add to this, is that they're a beginner trader. So is it possible as a beginner trader to make 5 to 10% a month with a maximum drawdown of 3%? No, it's not.
No. It's possible, but it's pretty much impossible. Yeah.
It's possible to do it in any one given month, but to do that consistently every month, to do 5 to 10% every month with a maximum drawdown of 3% is really, and for a beginner, you know, as a seasoned veteran trader, all right, I don't short-term trade anymore, but even when I did, that would be still quite, I could do it. I could have a run of several months of really good run, but there's no way I'd be able to consistently do that month in, month out. With only a 3% drawdown, never going to happen. No. Why has he said with a 3% drawdown?
Well, that's the big question. But these questions I'm getting more and more, and I think it's very much, there's a correlation between the amount of exposure online of these prop firm challenges. So that to me is where the question's coming. When they're that specific, you know, the old question used to be, is it possible to make 5%, 10% a month? But now it's always caveated with the drawdown. So that tells me straight away they are
funded account.
They're looking for funded accounts. And I get from a beginner's perspective, they want to come in. They may be starting with a small amount of money. There's a greed element there. They want to be successful, and they've been bombarded with this advert. So they want to find out if it's possible. Yeah. But the challenge is the marketing around these prop firms entice you in with, you've only got to make this, and then you've got your hands on all this money, or you qualify exactly. And it's the new way out. It's the new path to financial freedom. Yeah. So I can see why the question's coming. So for me, I think that's the underlying thing. But I think if we explore it a bit more, you were talking about this study that you recently came across from California, which is very interesting.
Oh, no, I don't want to give that one out yet. I'll save that one back. But no, I mean, just coming back to the funded account thing, first of all, before we took into that study. That study, by the way, that was, we'll share this in a moment, but that was about day traders. So we're going to come to that.
We'll link into day trading.
Because a lot of these funded account programs, not all of them, but there's a certain number out there. They're geared towards the intraday trading. Some of them put limits on. You can't even hold positions over a weekend. Some of them, obviously some do. So by their very nature, they're encouraging people into that short-term trading, which we'll share that study details in a moment. So the problem is that when someone's very much short-term trading like that, that's the hardest end of the scale of trading in a way, because the market is so busy when you're looking at a 1-minute chart or 5-minute chart, whatever, that with no experience or very little experience, you're not going to be able to handle it. You're going to get goaded into trading when you're sat there, and you may have some form of strategy or whatever, but by the time you get a few hours into the day, that's gone out the window and the market's flying. You think, I've got to do something. So it's the discipline which is so difficult for someone who's only been trading less than a year, maybe even less than 2 years. So, but we'll touch on that as well. So, yeah, I think coming back to the funded stuff, that people really need to appreciate that. Do you really think that there's these firms out there who have these awash with cash, and they're going to give you a genuine £100,000 or dollars, whatever, to go and trade with their money, and all you've had to do is pass a test over a few weeks or even over a few months? Do you genuinely think that that's real money? One, most of those accounts are demo accounts. They'll still pay you if you make money, if you get through, and because they're paying you out of all the people who are paying them on the challenges. But some of them will say that they are genuine accounts, and they are, but they're just highly leveraged accounts. They're not putting 100,000 in for you. They're probably putting 500 quid in an account, heavily leveraged up. So, which is why, coming back to it, you have these big restrictions on drawdown, because they're not actually going to put 100,000 in an account.
I think it's interesting how when so many people are asking you and me about this from the point of view of, is it possible, to get their hands on this funded trading account? But as soon as you flip the question on them and say, well, if you had £1 million,
would you give it away?
Would you give it away to a trader that had made 10% in 1 month? And the answer is always no. It's amazing how you create a little bit of objectivity for that person and their answer is no, but from their point of view, they want to do it because the greed and the desire is the thing that's taking over.
I love that. I love that, just flipping it around like that, because all of a sudden they'll be like, no, I wouldn't. I know. Even if someone's done it over 6 months. Actually, let's go to that study.
Yes.
So this study was done, University of California did a study of day traders. So specifically of day traders in America. And they found that over a 6-month period, 13% of day traders were profitable over a 6-month period. So you'd say, okay, well, we all know the stats are, are skewed, and that it's always only going to be a smaller percentage of people are profitable, almost in any field, or whether it's trading or if you look at elite sports people, it's only the few that make it to the top. So okay, fair enough. But that's over a 6-month period. When they widened the surveys out to over a 5-year period, the stats went down to 1%. Just 1% of day traders were consistently profitable over 5 years. So what that's saying is that in any one 6-month period, anyone can make money.
Yeah.
And that's true whether you've got a given intraday strategy. It might just be having a rich seam over that period, which may never be replicated again, or that you've been a bit lucky and so it's worked out for you over that period. But the numbers drop away over time. Now, part of that, looking at that longer time frame, is that within that 6 months, you're going to have a load of new people in that 13%,
yes,
who may have just got, like I've just said, got a bit lucky, but they haven't built the skills as a trader. So maybe they've already, in another few months, they've ditched it and they've quit trading because they've lost or whatever they've done. So really it comes back to that 1% in the main of day traders. So people who are wanting to get into trading and they want to go day trading first of all, really, you've got the stats are so stacked against you. We keep saying this. Go into a more semi-swing trading environment first, where you're not as tempted. You're going to talk about that in a minute.
Yep.
And so you're putting the stats more on your side than trying to make it into that 1%.
Yeah, totally agree. And I think what's interesting, so it begs the question, if the odds are stacked against you, full stop, as a trader, just like you said, just like elite sport or business, it's the same thing. If the odds are even more stacked against you to be consistent over the long term as a day trader, it begs the question, why do so many people want to go in that direction to start with? And I think it's temptation. It's logic versus emotion. I can sit with day traders that I work with and show them the stats of how they're going to be potentially more consistent as a swing trader, but they still want to do it. So to me, it comes down to about two things, really. It's the fact that there's this linear thinking that if I've got more time and I can place more trades, I'm going to make more money. Because if I can place 5 trades in a day and 50% of them win, and it's 2 to 1, they do all these numbers and put it out in theory, but then they're sat in front of their screen, and like you said, by the afternoon they're buying euro yen when they never even looked at a euro yen chart. So it's the idea that this temptation is constantly there as a day trader. As a swing trader, yes, you've got to have the patience to hold on to your trade, but you're not sat in front of your screen permanently. And at any point as a day trader, you can flip the screen, change the market, change the time frame, and be jumping into a trade and potentially be making money. And that temptation, which you talk about, it's like the devil. It's always there. It's always tempting you. It's getting you to come in. And before you know it, you're clattering onto your keyboard and you're in and you're placing trades you shouldn't. And I know this because I've been in that situation myself when I first started out, where I'm there and I'm like, oh, I want to go on a trade. And that that is much harder to deal with if the opportunity to trade is there permanently. All traders have to get over this idea. All traders know they need to be disciplined, but to actually emotionally get over that is something that takes time. So yeah, to me, why would you put yourself in a position where the temptation is there before you've built up any emotional strength? Start with a longer time frame, build up some emotional strength, build up some thick skin that you talk about, and if then you want to maybe move towards intraday swing or slightly lower time frames, great. But starting at the point where you're literally sitting on a 5 or a 1 minute chart is just asking for trouble.
It's not that the technicals are necessarily. There is a slightly different technical factor to intraday, but you're right. It's the emotional side of things. It's not that, because people say, well, surely I've just got a strategy and I'll just, no, it's not that. It's all this other stuff that's going on. The temptation, as you will, the devil is goading you in. Come on, come and trade me. Look, I'm moving around a lot on a 1 minute chart here. Come on, come and get me. And that's what happens. And I think coming back to what you just said previously, is that when people are sat at their desk, they feel like they've got to be doing something.
Yeah.
It's like a job. They've got to feel like, well, surely I've got to be doing something. Whereas flipping it around and see yourself more like a fisherman. Fishermen aren't pulling the line out with a fish every 10 seconds. They are sitting there and they are waiting. So they are waiting for the catch to come along. And so it's a different way of thinking when you're approaching trading, whether it's swing trading or intraday trading, which is really what we're focusing on here today, is you still got to let the trades come to you. And so your job should be to have your feet on your desk for a lot of the time and not be doing anything. I remember 20 years ago when my wife and I first got together and I had my feet on my desk and she said, oh, can you just help me with, I went, no, I'm trading. She went, no, you're not. I'm trading. So, you're watching, and that's what you're doing a lot of the time. You're watching and waiting like a lion stalking its prey. It's sitting there and it's waiting a lot of the time. So yeah, it's a change of mindset, but very, very difficult. But it's the bane of our lives, is people wanting to go down that day trading route. And we know the stats are against them. And we've just shared some there, but it's like a faith. It's like a religion almost. It's that they want to do this so desperately. And yet we're trying to say, look, you can still trade, but don't trade off those ultra low time frames. Look, there's some great scalpers out there who are highly experienced, but we're talking about people who have got less than, let's say, a year or two's experience. The odds are against you, so why not go, like you've just said, the other route first, and then if you still get a few years down the line and then want to do it, fine. But
I think also be wary of how you justify doing it. Like so many people will justify, well, if I trade more, I'll make more money. Or, I'll get more experience. That's one I hear a lot. Well, surely, if I can get 100 trades under my belt, then I'm going to gain more experience, because they've associated experience to be physically placing the trade. But as you just said, part of the experience you need to gain as a trader is being able to sit there and do nothing. But in their mind, I think they think that if I'm trading, I'm gaining experience. But what if you're gaining completely the wrong type of experience during that period? So these sort of linear assumptions, or well, if I trade more, I'll make more money, or if sooner I get 100 trades, I've got more experience under my belt. To be wary of these thought processes that you think are going to help you become more successful, when actually, as you always say, less is more. I think that's an important frame.
Yeah, and so coming back to the beginning of this chap, I think it's really important for people to think, okay, so if these businesses are encouraging me to do this, why are they encouraging me to do this? And so these are businesses. They're there to make money out of you, and some of these funded account companies they're getting better. Some of them are far better than others. But please don't see it as a holy grail, because they're not all sitting there saying, like you said earlier on, oh yes, here's a check, here's a massive account for you to go and trade. They're usually, the reason why you have tight drawdowns is because they're just putting a margin deposit down on an account for you to trade, or it's a demo anyway, and whatever, they want to restrict you what you can do. So they're in it to make money themselves. some people can trade on a funded account and will get through and will make money. But again, it's the few. So just see it for what it is and don't think this is the holy grail. Because as far as I'm concerned, this is just the latest twist in the game of trading education and trading. You know, it's just the game's moved on. And I think that, I'll be honest, I think the regulators are going to come down on this whole sector in the coming years and say, hold on a second, we've got people who are losing money just in application fees because they just get addicted to it. I've got to pass this test, I've got to repass this test because I want that promise of that pot of gold that I'm going to then get to trade, and it's not actually that real.
Yeah. So to finish up, I think we want to address this idea of the word consistent, because this comes up a lot for me as well. Is it possible to consistently make 10% a month? So to me, the word consistency is, what does that mean? So are you looking to, does consistency mean 10% per month every single month? Because I think a lot of people will use the word consistently, and they will think in terms of averages. So they'll say, is it possible to average 10% a month? Is it possible to consistently make 10% a month? And it's a very murky area, because a lot of people, when they say average, I think on some level, they're thinking that they can treat it like a paycheck. So I'll often get asked a similar question. So I was interested to know your thoughts on when people say the word consistent or average, what you think those traders should be thinking about in that environment.
Well, yeah, it's not a job for starters. It's not a salary. And so it's not a consistent salary. It's not a consistent job. So it's not going to be consistent. And I hate that, as we both do. We hate that word, that consistently profitable expression, because it's impossible to just make 5% every month, or it's impossible actually to make 1% every month, because you're either going to make a lot more or you're going to make less, whatever. It doesn't matter. Yeah. So that consistent word is a weird one. Let me give you an example. I was showing one of my traders' stats just this week, and he'd made 58% over the last about 15 months.
Excellent.
And one of my other traders was looking at it and saying, I'm gonna trade. It was an automated program. I'm gonna follow his settings, and I'll do that, which he's allowed to do. And I said, well, hold on a second. You're just looking at the headline number there. Let's actually break this down, shall we? So we looked at the monthly stats. So although it made 58% over the course of a 15-month period, and as Matt had said, it was quite hairy at times. So he's actually reduced the volatility of the program, because at one point it didn't make it actually lost money 4 consecutive months in a row. So you imagine you started in that first month of it having a losing month, then second month, then third month, then fourth month. You're now thinking, I don't think I'll bother with this, and then I'll jump over to something else. So at the end of it, yes, he's made 58%, which you could then say, well, that's whatever, 4% a month for 15 months or whatever that works out at as an average, but it's not, because he's made 14% in one month, 15% in another, and then a few losing months of -2, -5, -1. So you've got to put up with everything. So it's not consistent. It's, there's a random nature of returns with any type of trading strategy. There's always going to be winning spells and losing spells, and I think that's the main thing, the random nature of returns. You can have the returns, but it's not like a job.
You've got to accept it, and you've got to go through it.
Yeah.
There we go.
Okay.
Great show.
Brilliant stuff. That's the end of this show. Trade safely out there.